The only way you can make a good amount of money is if you buy in the right markets. You don't want to buy just any backyard. Welcome to Financial Fluence. In this video, I'll show you 4 markets you should be buying in. Let's now get going. There are some places in the world where you should never buy real estate. In fact, I'm not interested in going into 19 of the 20 markets because, in the end, the word location applies more than ever, and you need to be very careful about where you buy real estate. Why have recent headlines predicted a significant housing downturn? According to a recent Moody's article, 210 housing markets in the US are now at risk of seeing home prices fall by 15 to 20%. Investing in half of America's major cities is therefore probably a bad idea. More importantly, you should not buy real estate based solely on whether its value will rise or fall. The size of your market, what's in that market, the population there, whether it's growing or shrinking, whether people are moving to that part of the country, the state of your industry, and the state of the economy all play a role in developing the right strategy. Do you recall the recent pandemic that caused the world to end, drove people insane, and caused all this false information to spread? So, at that time, there was a supply chain problem that seriously hurt the real estate market. As a result of people saying, wait a minute, rates are really low. If I'm going to be working, where I work, and I'm going to work from home, I need a different kind of home. As a result, everyone who wanted to get into the real estate market bought something different, and we began to miss out on millions of homes. We were already behind, but we went insanely behind, causing real estate prices to skyrocket. It's also because the government printed trillions of dollars that we lacked and couldn't back up. As a result, inflation began to take hold, with real estate prices nationwide rising by an average of 50% over a 24-month period. Based on Mortgage Professional of America, Boise, Idaho, 73% overvalued, which indicates that the market is ready for a correction. Other top markets include Austin, Texas, 68%, and Ogden, Utah, 65%, and so on. That's a scary figure because a house worth $300,000 should be worth $200,000. That's what a 50% correction would look like. And if we saw one that big, 2008 would look like it was resurrected. Most people will consider this to be bad news, but it isn't. A correction means that we went too far in one direction. Some people are taking out home equity loans and withdrawing funds to start investing. That's a brilliant strategy, and it's something that everyone should follow, but most don't. Right now, you could be sitting on a house with record-breaking equity. We now have a country record amount of equity, $185,000, which has never been seen before. In fact, in just 1 year, the average equity increased by $51,000. They'll be like, on paper, I'm worth more money, and I feel good about myself. And then the market correction will be like, oh my, but the number went down, and now I don't feel so good about myself. And I'll be like, man, why don't you do something real intangible that you can actually do about this? No, I do not believe the market will return to pre-COVID levels, but you can expect some of these to be overpriced. And before we continue, don't forget to subscribe to the channel, hit the like button, and turn on the notification bell to be notified every time a new video is uploaded. Let's return to the video now. Ironically, when I entered Phoenix, Las Vegas, and a few Florida markets, they were also among the hardest hit. We entered those 3 markets and began evicting thousands of people. People would give their mortgage to the bank when the market fell because they believed it was no longer worthwhile. Everyone's sphincter is pinching right now because interest rates keep rising, and they've announced that they'll continue to rise through the next year. So if rates rise to 6, 7, and then 8%, I'm not sure what I'll do. That's normal interest rates, but since 2008, we've all had essentially free money at 2 to 4%. People forget because they have short memories that 7 to 8 is actually excellent for investing, and there is a lot of money to be made. If you ever see that happen in the market at your young age, you better go in 10 times bigger. Aim for $1 billion. Now it's time to reveal the 4 hottest investment markets to you. Number 1, Orlando, Florida. Orlando has a growing population of elderly citizens who make excellent runners because they have the means and treat properties well. While the average home in Orlando cost $362,100, prices increased by 15.8% last year, and that trend appears to be continuing. Florida is known as the Orange State because it is home to the majority of retirees. The Orlando area in Central Florida, which is far from hurricanes and other hazards, is experiencing the greatest increase in real estate valuation, and rents have been stable for nearly 10 years. They adore golf, master planned communities, the ocean, and just about everything else. You can stay in this market as long as the indicators keep flashing a hardcore green exit sign. This market will follow in the footsteps of New York and California. Number 2. Bentonville, Arkansas. It's home to both Walmart and Tyson Foods and has 5 colleges and universities nearby. It is a diverse and growing city with high rent demand. It won't grow as quickly as Florida, but it compensates in terms of cash flow, industry, and what's going on here. In other words, don't get too attached to the strategy, such as short-term buy and sell, and hold this home for 5, 6, or 7 years. Or location. Instead, ask about the ROI. In my case, you can earn between 30 and 40% per year. Number 3. Memphis, Tennessee. As of September 2022, Memphis's median sales price is $205,000, still significantly less than the national median of $403,000. Memphis has historically been a reliable cash flow area with a stable job market and a good home affordability. Its rent market has the lowest price per rent per square foot. Number 4. Oklahoma City, Oklahoma. This place has a unique shape, a stable job market, and several universities. Oklahoma City real estate is affordable primarily due to the abundance of developing flat land. The median home sales price in September 2022 is around $257,000, with a consistent 9.4% year-over-year growth. You'll notice something when I talk about a short-term buy and hold for 5, 6, or 7 years on a home price. I'm not talking about, say, luxury real estate. I'm not even mentioning multifamily properties. This generates a ROI equation, and keep in mind that ROI, or return on investment, consists of a few primary goals. Below the median with great rent and appreciation attracts the right kind of tenants based on a variety of other factors. What happens to the property's value if I rent it out? What is my cash on cash from the rent they give me after I pay all of my expenses and have principal reduction, which means my renters are paying off the house for me? What I mean is that the average person in their 60s has $200,000 saved up in a 401k or an IRA, but the average equity is higher, which means that after all of their years of working and putting money into a retirement account, they actually perform better on just buying a house and gradually paying it off. Assume your typical equity retirement is worth $250,000. Your average equity retirement would rise to $1 million if you purchase 3 more properties. The typical millionaire achieves success in the real estate market in this manner. What type of real estate investment is the best one I can make that will work consistently over the next 10 or 20 years, compound incredibly powerfully, and make me a multi-millionaire while I'm busy caring for my family and focusing on my career? These 4 markets are critical to achieving a high return on investment. And that's all. I hope you enjoyed this video. If you enjoy similar stuff, check out my other videos. And if you like it, hit the like button, subscribe to the channel, and turn on the notification bell. And I'll see you in the next video.